what you've heard overnight, are you quickly going about changing your expectations from what the Fed does from here, or have you done so already based on Omicron?
We've been relatively cautious anyway about our Fed expectations because we think that there are headwinds for the US economy. We'd already flagged concerns about another COVID wave even before we heard about the new variant. And given the relatively low vaccination rate across the US, that does leave the economy vulnerable. It's an incredible headache for central bankers at the moment because the new variant potentially comes at a time when we have very high inflation anyway, and we know from experience that supply chain disruptions worsen when you have these further waves of the virus. Alongside that, you have the uncertainty about whether people are going to be presenting for work, and I think you had a discussion about that just now, with the labour market already showing signs of being squeezed, or rather a mismatch on the supply and demand side of labour in the US. It has the potential for real stagflation problems here, rising inflation, rising labour costs, and weak demand, weak activity.
Sarah, good morning. It's the last day of November, and you were smartly warning about a COVID wave even before this. But for many people, their trading plans have been completely ripped up by the price action the past week. Oil markets off 13% since last Wednesday. Treasury's curve is priced at a rate hike. If you've got a fresh book today, what is the year-end trade that most appeals to you?
Well, I think that caution is the watchword. So a lot of the moves have happened already. We've seen some real gyrations as markets just over the last 24, 48 hours, as markets have, taken a pessimistic, then a sort of more optimistic, then a more pessimistic view of the risks around this virus. I do think that we will be in a better position in about 10 days' time to know the severity of the virus, the transmissibility, which does seem to be very high, and also how effective vaccines are against the new variant. At the moment, the news is not looking particularly good, so I think the risk-off trades that we're already seeing being put in place look the most sensible place to be.
What about the lockdown story around Europe, Sarah? Because even before Omicron, this was something we were talking about. We know about Austria. Uncertainty still remains around Germany and perhaps other places. We'll have to see how it develops. What kind of slowdown are you factoring in as a result of lockdowns over the winter?
Yes, I mean, we saw Europe doing pretty well in the second and third quarters. This current quarter is clearly going to be quite a lot weaker. We already had a below consensus forecast for growth for next year because we expect some of that weakness to persist through to the early months of next year, in particular if this variant does prove to be as transmissible and as severe as might be the case. So it's a relatively weak outlook, certainly for the early months of next year. If we think about how long it might take for a new sort of vaccine to be developed and rolled out in scale, then we're really talking about late in the first quarter of next year. So that does suggest that we could potentially have several more months of below par activity across Europe, and health systems are already stretched with the current wave, so it does augur for a relatively worrisome outlook, I think, for Europe in the very near term. Certainly no rush for the European Central Bank to make any to go for any policy tightening in the near term, and they may well be starting to think about whether what they need to do about the PEP going forward into next year. The assumption had been that they would bring it to an end in March, but that may not happen.